Have you ever wondered what an accountant specifically does on a daily basis? Well, I'm going to dive in and show you an example of how to perform a cost of goods manufacturing schedule. For those of you who have already taken accounting class, this will just be a refresher. So to begin, we're going to use the income statement for the Empire Company and use this information to make a cost of goods manufacturing schedule for the month ending October 31st, 2020. So to start, you want to label your schedule with the company name, the name of the schedule, and the time frame for the month ending October 31st, 2020. Now to start off with, you want to start with the work in process for the beginning of the month. Work in process for October 1st is $20,000, right there. Now, then you move on to the first cost of the manufacturing schedule, direct materials used. To find direct materials used, you want to start with your raw materials inventory at the beginning of the month. You come down here to raw materials October 1st, and then you want to add your raw materials purchases in that month. You come up here to your operating expenses, raw materials purchases, $264. Add that to your raw materials inventory at the beginning of the month, and that will give you your total raw materials purchased. Now, once you have that, you want to subtract that from the raw materials at the end of the month. So you come down here to the raw materials at the end of the month, October 31st, $29,000. Now notice you put them in parentheses because anytime that you're subtracting in accounting, you want to put in parentheses to let them know that it's a subtraction. So once you have that, you have your final direct materials used, which is $253,000. Next, you move on to your second cost of the manufacturing schedule, which is direct labor. Now this is pretty simple because a lot of the times it is given as right here, direct labor cost, $190. Simple. Direct labor, $190. Now, your third cost for the manufacturing schedule is manufacturing overhead. So within your operating expenses, within here is your manufacturing overhead that you want to list in order with Liquidity. You want to list in order within Liquidity. So to start with, you have your indirect factory labor, $28,000, and then you have utilities, $9,000. But notice utilities is only 75% and insurance is only 60%. So for utilities, 75%, $12,000 gives you your $9,000, and then for utilities, your 60% of your $8,000 is $4,800. Then you have insurance, rent on factory, which is $60,000, then depreciation, which is $31,000. You add all those up, and that'll give you your total manufacturing overhead, which is $132,800. If you take all your costs, you take your overhead, add your labor, and add your direct materials, and that'll give you your total overhead, which is $575,800. Now, once you take that number and you add your work in process at the beginning of the month, you'll get your total cost work in process of $595,800. Once you have that, you subtract your work in process at the end of the month. So again, come to work in process at the end of the month, $14,000. And then notice again that they're in parentheses because you're subtracting. Once you subtract the total cost work in process minus your work in process at the end of the month, you get your total cost of goods manufacturing. Now you're probably wondering, what is all this used for and what is the purpose? That is because a lot of managers and analysis would use this information to gauge their daily decisions. So again, the three costs to a manufacturing schedule is direct materials used, manufacturing overhead, and direct labor. Now you can go home and tell people that you know how to do a little bit of accounting.